Have you ever asked yourself these two questions? What is the formula of wealth? Or what's the formula for being a millionaire? In this video, you will learn the formula of wealth. I will walk you through 3 highly successful entrepreneurs and millionaires, and then they will reveal to you the formula of wealth. Are you in? If so, watch this video until the end to learn the formula of wealth. Welcome to Success Booster Academy. If you are looking to make more money, manage it wisely like a multi-millionaire, and multiply it fast so you can become financially free, then make sure you subscribe to this channel and then ring the notification bell below this video so you can be notified when we launch amazing videos like this. Growing up, I didn't know there was a formula of wealth. I knew very wealthy people who invested in real estate, but I had no idea how they did it or how they became wealthy. What about you? Did you know there was a formula of wealth? Let me know in the comments below. I always believed that if some people could become wealthy, even though they grew up in poverty, then I also could become rich and wealthy. But after qualifying from university, I realized I was doing exactly the opposite to building wealth, because I was working too hard, but not very smart. I was working Monday to Sunday like a slave to save money, just to put in the bank. I wasn't building wealth, and I got so tired. I got so fed up with working like a slave and not being able to save, to invest, and to become rich. That's why I decided to study the formula of wealth and to study how the rich and the wealthy achieve their wealth. I got this formula of wealth from studying countless millionaires, multimillionaires, billionaires, and successful people. It's the formula of wealth. As you can see on the screen, the formula of wealth is made of income minus expenses plus assets, which is return on investment on assets, plus value plus fair exchange times leverage. So this formula of wealth is divided in 2 parts. To make this formula of wealth easier for you to understand, I will split this formula in 2 parts. The first part will be income minus expenses, then plus assets, which is return on investments. And in the second part of the formula, I will talk about the second part of the wealth formula, which is the value plus fair exchange times leverage. But before we start talking about this formula in details, make sure you grab a pen and take some notes. And remember, the more notes you take, the more you can learn. And as they say, the more you learn, the more you can earn. So learning is money. Learning is income, if you implement what you're learning, obviously. So let's analyze the first part of the wealth formula, which is the income minus expenses plus return on investments. So the first bit, which is income. Let's talk about income. We know that the only way to get wealthy is to increase and maximize your income, to accumulate multiple flows of income. That's the only way. So you need to find a way to produce more income. I'm not just talking about working more hours or getting more income from a job. You have to multiply and get multiple streams of income, like the millionaires. Millionaires have 7 sources of income. They have active income, they have business income, they have dividend income, interest income or income from shares and stocks. They have rental income, which is income from property. They have royalty income, which is income from, for example, books, ebooks, online courses, and so on. If you want to know more about how to create multiple sources of income like the millionaires, then watch the video coming on your top right corner. This video will give you more details about these 7 sources of income. Just watch this video when you finish this one. Your purpose should always to be maximizing and increasing your income. to getting multiple flows of income. To show you how important it is for wealth, I will use the wealth creation formula that I borrowed from my millionaire mentor Grant Cardone. This formula has 5 steps. The first step, as you can see, is to create income. The second step is to increase your income. The third step is to save, to invest. Obviously, to invest in assets that will give you a return. We'll talk more about this when we talk about assets. And the fourth step is to invest what you can afford to lose. And the 5th step is to get multiple sources or streams of income. My mentor Grant Cardone said that he spent over 32 years studying very successful people, and he came up with these 5 steps. So I would highly recommend you to take notes on this wealth creation formula. Okay, so make sure you implement these 5 things. First, you have to create income. If you have only one source of income, then you need to increase your income. You need to go to the second step and increase your income as soon as possible. And then you have to save to invest. Save to invest in assets that will make you rich. And then you have to get multiple flows of income, which is step number 5. Like the millionaires, they have 7 sources of income. If you keep multiplying your income and get more income, then you will start building wealth. So we just covered the income bit of the wealth number 1. So now we need to talk about the expenses. So as you can see, wealth equal income minus expenses plus assets. We just covered income. Now let's talk about expenses, shall we? To build wealth, of course, you need to maximize your income and get multiple sources of income. But also, you need to minimize your expenses. The reason you need to minimize your expenses is because you will never be able to increase your wealth if your expenses are greater than your income. Even if you have multiple flows of income, but your expenses are greater than these multiple flows, you will not be wealthy. It's not just about increasing your income and getting multiple flows. You also need to look at your expenses very carefully. When I'm talking about expenses, I'm talking about bills, taxes, and everything else that takes money out of your pocket. The good thing is that I have a strategy I developed to keep your expenses on track, to make sure you are actually creating wealth and keeping your wealth. This strategy is called the pay DEBT last. So DEBT stands for, D stands for debt, E stands for expenses, B stands for bills, and T stands for taxes. I learned this strategy from my multimillionaire mentor, Rob Moore, who is also a best-selling author of multiple books, including Money, Life Leverage, and many others. Rob told me that you need to always pay yourself first so you can get multiple flows of income, but also you need to be paying your expenses last, paying the taxes last. Because as I said before, if you really want to create wealth, it's not just about increasing your income or getting multiple flows of income. You also need to make sure you look at your expenses and making sure that expenses are never greater than your income. So make sure you keep your expenses on track, because if you don't, you will always be broke rather than a millionaire or a multimillionaire. So you need to minimize your expenses. But of course, as you're getting more income, as you're creating more flows of income, you will have more expenses. For example, if you're earning over 35,000 in the UK, you have to pay 40,000% tax on your income. The good thing is that if you have a business, you can claim part of these expenses. And if you earn more than 150,000 K, or if you like more than 150,000 pounds in the UK a year, you have to pay 45% tax on your income. So you see, you have to understand the relationship between income and expenses. Or if you like, you need to understand that the more income you have, the more expenses also you can have. So you need to know how you can minimize your expenses, how you can minimize your taxes. I do something called tax efficiency, which is about working with smart accountants to make sure he's looking after my taxes in a strategic way. I hope you can do the same. So we already covered the income bit of the formula. We already spoke about expenses. Now let's talk about assets, because the first part of the formula, wealth number 1, is income minus expenses plus assets. Here I'm talking about return on investments on the assets. Of course, it is important that you increase your income and look after your expenses, and including taxes. But to create vast wealth, you need to invest in assets and get return on investments on assets. So you need to be saving with the purpose to invest in assets. Two main types of assets I would recommend you to invest your money in. The first one is what I call income producing assets, and the second one is appreciative assets. Income producing assets or assets that produce passive income, such as real estate, or any business that you don't have to exchange your time for money. Any business that you don't have to be present to make money. You invest the money and then money comes automatically into your account. The second asset type that I recommend you to invest is appreciative assets. These are assets that appreciate over time. I'm talking about any asset that increase over time, like property investments and so on. So you need to be investing a proportion of your income in assets. Femi Pedro, who is a successful entrepreneur, economist, banker, investor, and Nigerian businessman who wrote the book, The Formula for Wealth, said that you just need to be disciplined to follow the rules of money and save 20% of your income every month to invest in vehicles like funds, real estate, or private companies. Or even you can start your own business. So you need to take a small proportion, let's say 20% of your income, and make sure this money go automatically. For example, you can save a direct debit, so this money can go into a saving account and is used for investment purposes. Do not touch this money. This money shouldn't be touched. That's the only way. You need to save to invest in the right type of assets, not assets that go down in value or assets that make you poorer. Now, let's talk about the second part of the formula of wealth. So wealth number 2 is the value plus fair exchange and then times leverage. So why is the second part of the formula so important? It is important because even though you use the first part of the formula, which is income minus expenses plus assets, even though you implement that bit and manage to maximize your income, minimize your expenses, and increase your assets, you need to make sure that you are creating vast and sustained wealth. That's why the second part of the formula is so important. I kindly borrowed this formula of wealth from multimillionaire Rob Moore. So what is value? Value is the service you give to others. Value is the value you deliver to the marketplace. If you serve and give value to other people, people will benefit from this value and they will be willing to pay money for it. People are looking for their problems to be solved, pains to be alleviated, and for things to be made faster, easier, and better for them. So if you can help them to fix their problems and alleviate their problems, then they will be willing to exchange that for money. So that's service, that's value. Now, what is fair exchange? Fair exchange, an exchange or transaction has to take place for you to receive money and wealth. You have to offer a product, a service, or idea. Some people only offer their time. They exchange their time for money. So that's why they get active income. But you, to build wealth, you need to provide different type of value. I'm not talking about just the value from a job. I'm talking about adding value as a business or investing your time in creating different flows of income. The more value you can provide, the higher price you can charge for your products. But again, you need to make sure you are providing fair exchange. You're not charging too much for your product or service, otherwise people won't pay for it. Test your prices and get feedback. You need to ask clients if the price is fair. It's not just about coming with your price and that's it. What about leverage? Leverage is the scale and speed of service and remuneration, and also the impact it has on people. The more people you can serve and solve for, the more money you can make, the more wealth you can build. The bigger the problem, the bigger the transactional amount. You will only leverage and scale wealth for the long term if you have value and fair exchange. What happens if you have a great value and have fair exchange, but you don't leverage, don't scale? Well, if you do that, then you don't create vast wealth. You may have a great little business or have no business at all. But if you desire true wealth, more wealth, you need to embrace scale, you need to leverage. You have to work harder and longer with more bitterness and resentment, bending to the will of your clients. Your passion and profession will turn into desperation and delusion because you don't provide fair exchange. You're providing value, you're leveraging, but the price are not fair. Be careful about that. What about if you provide fair exchange and leverage, but not value? Well, in that case, you won't sustain your wealth for the long term. This can be one of the most dangerous variations of the formula, because you can scale fast on an overpriced claim. In the end, your reputation for not giving value and a fair exchange will leverage or scale your wealth. Remember, value is created by solving a problem many of us have. Thus, if you provide no value, then you won't sustain your wealth. So as you can see on the screen, this is the breakdown of the wealth formula. Wealth is equal wealth number one, which is the income minus expenses plus assets, which is return on investment, plus wealth formula number two, or wealth formula number two, which is the value plus fair exchange times leverage. So if you want to create vast wealth that sustain over time, you need to make sure you are getting multiple flows of income. You need to make sure that you are minimizing your expenses. You need to make sure that you are investing in assets that increase in value over time, which is called appreciative assets. And also you need to make sure that you're investing in income producing assets that produce passive income. And that was the first part of the wealth formula, or form of wealth. The second part is that value plus fair exchange times leverage. You need to make sure that you are providing value to people. Value is the service you provide to people. Fair exchange is making sure that your prices are fair. If you rip people off, people won't buy your products. And then leverage. Leverage is the scale. Leverage is the scale and speed of service remuneration and the impact it has. The more people you can serve and solve for, the more money you can make. Hope you have enjoyed this video. If you do, make sure you subscribe to Success Booster Academy by clicking the button below. Then ring the notification bell so you can be notified when we launch amazing videos like this. What's number one thing are you going to do from now on? Are you going to use the formula of wealth to maximize and create massive wealth? Or are you going to continue working hard and like a slave, exchanging your time for money, but never building wealth and financial freedom? That's your choice, but make sure you choose the right choice.